As we've seen precious metals fall, everyone's questioning, well, everyone's asking the question, have we hit a bottom? Now, it seems like that might signal that we have hit a bottom right there. And also the commitment of traders report, you've mentioned how this is very bullish for precious metals. It seems like we may have hit a bottom. Can you expand on that?
Yeah, I meant to pull up a chart for the COT, but the commitment traders report is, I think, something that should be in everyone's cross-check. Just check it every week. It comes out every Friday. It's not a perfect tool, but it's a good tool to put in your toolbox. The downsides to it is, you're getting data that's 3 days old. The data is captured Tuesday after the close, and then you don't get to see it till Friday. But it shows the positioning of the managed money, the funds, and the banks. And with the assumption that the big banks are the smart money, the JP Morgans, the Bank of Americas, you can see how they're positioned. And right now, their short position, net short position, is the shortest it's been in a very long time. And it's at a level that's consistent with major lows in silver. And not so much gold, but specifically silver. Now, it's not a perfect timing indicator, but it does show you that we're very, very likely closer to a low than a peak here. Could silver flush down another couple dollars towards 19 or 1850? Yeah, that's possible. I think it's unlikely. But if that were to happen, I think that would be the buy of a lifetime, where the upside potential is measured in, tens of dollars, if not more. Downside risk is, $1 or $2. So whenever I look at a chart, the first thing I ask myself is, what's the trend? And when you look at silver, you guys can see this chart here. There is no trend. It's just straight sideways in this channel for almost 2 years now. So there's no trend. The next thing I look for, is there a clear and obvious pattern? A head and shoulders pattern, a triangle pattern. Well, right now, we're not really seeing any clear patterns in silver either. So all we have is support and resistance, and you can look at some Fibonacci numbers. So 2141 had been the low for the last 2 years. We breached that a couple weeks ago and dropped down to $20.42. So 2141 is initial support, then $20.42. That was the low from a couple weeks ago. That's the next support before you look at 1970 and then 1850 to 1890. On the upside, resistance, no surprise here, 2750, 2850, and then the big one right at $30. Really, the big thing to watch, if you want to zoom out a little bit past, the next couple weeks here, is getting through $30. I am absolutely convinced that is going to happen at some point. And once we get through $30, I think we see 50 fairly quick. Now, it seems premature to talk about $50 silver, even $30 silver when we're down at 30, down at 20. And I totally sympathize with that. But just if you want to zoom out, the support levels, 18, 19, just below current levels, and then, $30 is the big resistance on the upside. In the meantime, as we wait, strategy is more important than predicting, when we're going to bounce here. Having a strategy, what's your accumulation strategy? Do you buy dips? That's what I'm doing. I'm buying sharp pullbacks right now.
When it comes to gold, what are some of the indicators you're looking for to forecast the price going forward?
I like to make if-then statements, and I like to say I deal in probabilities, not predictions. So looking at clear support lines here, we do have some discernible patterns here in gold. We're above a rising 200-day moving average. We're above the March 2020 uptrend line. We came and tapped that and dipped below it on an intraday basis very briefly last week or a couple weeks ago. So gold looks very constructive. The COT report or the commitment traders is not quite as bullish as silver. However, it's looking much, much better than it did. On a relative basis, it's pretty good. It's just not like, major multi-year bullish setup that we're seeing in silver. So I think as long as let me rewind here. I remember speaking to you right around March 8th when we made this 2078 high and saying we were due for a pullback, but as long as we make a higher low, the chart's going to look healthy. And the most recent low at the time was 1780. We came back here to 1785 was the low on that. So far, we've made a series of higher lows. As long as 1780, now 1785 holds, we're making higher lows, and that's a constructive look for gold. It may not feel like it because we've gone down for a couple months here, but higher highs, higher lows is what we're looking for. And the gold chart looks constructive.
I think it's really interesting to see this chart and how much gold has rallied really since that March 2020 low there. The uptrend is very clear right there.
Yeah, exactly. And our human emotions, if you go back to how it felt on March 8th when gold was up at 2078, you go on Twitter, people were just euphoric. To me, those are major caution signals for short-term pullbacks. But that's when everyone wanted to buy. People who had been kind of, cast the metals aside and weren't interested. Now, all of a sudden, they're looking to buy. Where? Up here. And now where we are back down here, everyone hates it again, and no one wants to buy it. Well, if you're a contrarian, this is the kind of environment you like. This is the kind of place where you can scoop up bargains. And if you're looking for bargains right now in the whole precious metals complex, it's junior silver miners that are the most undervalued on a relative basis, physical metal.
No, the last market we typically cover is going to be the US dollar. How is that looking right now? I know it's quite interesting how it's rallied, even though inflation has been raging for quite a while.
Yeah, and you sometimes you'll see that in when it's a fear trade. You see kind of the metals and the dollar rising together along with inflation. But the dollar had gotten extreme overbought here. This is on a weekly chart. You can see that RSI. It goes back a very long time before we've been that overbought, up against major resistance right here between 103, 105. I think the most likely scenario is that this was an interim peak. I would be surprised if we get back above this 105 and change level, this high from a couple weeks ago. But, anything is possible. I deal in probabilities, not predictions. So if we do break out above 105, there actually isn't much resistance all the way up until 120 or 120 on the dollar. I don't think that's going to happen, but it's an outside possibility. On the other, flipping the coin, if we fail at this little uptrend line here, the next major support isn't down till 94.65. If we pull back to there, that would provide a really nice tailwind for the metals and commodities and even general equities.
All right. Well, Steve Penny, we really appreciate your time today. Before we let you go, any last thoughts you'd like to leave with our viewers, and where can our viewers find you online?
Yeah, you bet, Elijah. Thanks again for inviting me on. I think we covered it all. But if people want to check out more, at Silver Chartist, I try and post on Twitter. And then we just launched our new mobile app and a whole new members area for existing members. And you get a nice discount for that. We keep it very affordable anyway, but happy to partner with you. And silverchartistliberty.com is where you can find out more about that and check out what we have to offer for our premium members.